Hey guys, welcome back to my YouTube channel. In today's video, we are going to be doing top-down analysis on XAUUSD, GBPUSD, and BTCUSD. Today is Sunday, 12th of April 2026. So we are going to be looking at the market outlook for this week. So let's see what we have in the market. If you are yet to subscribe to this YouTube channel, make sure to click on the subscribe button right now. Take us to 1K subscribers. Let's get straight into the video and turn on the post notification so you can be notified whenever we drop a new video. So without wasting much of our time, let's get straight into the video. If we are to do our top-down analysis as usual, we start from our daily time frame to see what is happening in the bigger picture. If we notice something in the daily time frame of gold, we saw a takeout of this low, and after a takeout of this low, we saw that gold came to hit this supply zone right here, and then it made a new low, which is this break of structure, right? This was the break of structure. So we can simply say that gold is generally in a downtrend in the bigger picture, right? But right now in our we have to also read our internal structure. So because whenever there is a break of a low, there is definitely going to be a pullback, right? So those pullback in the higher time frame will give you entry opportunities in the lower time frame. So let's see what gold has for us in the internal structure. So we have this high and we have this lower high, we have this higher high and another lower high, right? So we can simply say that gold is making series of highs, right? So we have the takeout of this particular high. Right now gold is still trying to break out of that particular high, because right now gold has only wicked above that high. It is yet to close above the high. So in our daily time frame, we also notice that there is an imbalance right here. There is an imbalance right here. It is here to fill it. And there is also an order block right here, which is a supply zone right here, which is also yet to fill it. So we can simply expect that gold is going to make uptrend to those zones before it starts its selling continuation again. So we simply know that gold in the higher time frame, the internal structure is simply bullish. So what do we do now? We go to our 1 hour time frame to read the structure clearly, to see what is happening in the 1 hour time frame. So what do we have in our 1 hour time frame? We can see that gold has been making series of highs. We had the breakout of this high. This is a break of structure. Now gold came to take out this liquidity right here, made another break of structure, right? Gold cleared these liquidities again, made another break of structure. What you will notice about this market condition is that gold has been taking out liquidities in the 1 hour time frame before breaking out to the other side. And if you notice, all the imbalances were filled. You will notice no imbalance is left unfilled. No imbalance is left unfilled. So we can simply apply that same particular pattern in this recent move, because right now we are expecting gold to make another high in the market, right? So we can simply say this is our last high. So everything that is happening in gold right now is just internal structure, right? So basically there is a particular concept that says that after the breakout of a major high or a low, it is going to build liquidity. It's either the currency or the metal or whatever it is that you are trading. It is either it creates liquidity after a break of structure, or it takes out liquidity that was formed before the break of structure. What do I mean? Now there is this particular high right here. Now this is a particular high in the market. Now market breaks above it. After market breaks above the high, it is expected that the market creates a liquidity, move up, then comes back to take out that liquidity before making a new high in the market, right? Or if the market does not create liquidity after the breakout of the major zone, emphasis on the major zone. Now if the market fails to create a liquidity after the breakout of the major zone, that means we have something like this: an high, a lower high, an high, a lower high, then a breakout of this zone. If the market fails to create a liquidity after the breakout of the major zone, then the last low that was created before the breakout of the major zone is going to be used as a liquidity, which is what? This low. Now the market will use this low as a liquidity before making another high. So we can simply apply that concept in the recent move of gold. Now if you notice something, this is our last high. After the last high, we did not see gold creating early liquidity. There is nothing like a liquidity before coming to this zone. If not, if gold was able to create a liquidity immediately after breaking out of this high, we will be confident on buying gold from this particular zone here, from this order block. But since market did not create a liquidity after breaking out of the major zone, what do we expect? We expect this particular zone to be used as a liquidity. I don't know if you are getting it. We expect it to be used as a liquidity for the next move. So we can simply see that gold made a lower high, an higher high, a lower high, an higher high right here, another lower high, an higher high. You can see the pullback here, a lower high. Then we now saw the breakout of this major zone, right? As I said earlier, if there is no liquidity after the break of the major structure, expect the last low or high that was formed before the break of structure to be used as a liquidity. So what do we expect now? Since market failed to create a liquidity immediately after breaking out of the major zone, what do we expect? We expect the last low to be used, which is this what? Low right here. We expect it to be used as a liquidity. That means this low has to be taken out. We expect it to be taken out before gold makes a new high in the market. And if you notice, there is a particular order block. You can see the order block that is right below that zone. There is an order block that is right below that zone. So we can see this place. You can see an imbalance right there also. There is also an imbalance, which makes this order block a very strong order block. Now you can see this is the order block. So if you want to take your trade right now, you can take your trade directly, because this particular, you can see what the market has done. The market simply created another set of liquidity. You can see these lows. You can see it has created another set of liquidity just at that particular structural liquidity. Now, and you target this particular high. You can see that is 1:4.8. So you can take this particular trade, or if you want to make it more, if you want to have an high risk to reward ratio, because that particular play there is an imbalance there and the market might fail. The market might simply fail to make a to hit the other block before moving to the other side. So we need to be very careful not to miss out on the trade. So what we need to know again is that since we know this is our low, we know that is our liquidity, and remember this is our last high in the 15-minute time frame. You can see this is our last high. After the market wicked above it, what did you see the market do? The market made a pullback. You can see the pullback, and right below that pullback we can see this 15-minute order block right here. You can see this 15-minute order block. So you can take your trade from this 15-minute order block, and if you want to be safe, if you want to stay safe, not to get wicked out before the market makes the right move, you can just use the 1 hour time frame order block so you don't get wicked out. But if you want to have more risk to reward ratio, you can simply take your trade from this particular order block right here. You can see, just put your stop loss right below it, and your take profits at this particular high, which is going to give us a 1:8.8. So if you are risking $10 on the trade, you are going to be getting $88. So this is particular trade on gold. This is my particular trade on gold this week. Or you can use the 1 hour order block or the imbalance, and you will get maybe 1:4, 1:4.5. So that is still a good. If you are risking $10, you're also making $40, $45, $50. So but if you want to increase your, this is like a more precise entry. This is like a precise entry. And if you check the 1 hour, this particular order block is aligning directly with the imbalance in our 1 hour time frame. The imbalance, you can see the imbalance is aligning directly with the order block is aligning directly with the imbalance. So you can simply take your trade from this zone. right? So that is that for gold. So let's go to our GBP USD. Let's go to our GBP USD. If you are yet to subscribe to this YouTube channel, make sure to click on the subscribe button right now so you can be notified whenever I drop a new video and you don't miss out on important setups also. Now let's continue. Now, as usual, we start from our daily time frame. Let's see what is happening in the bigger picture before we make decisions in the market, because we can't just rely on what is happening in the lower time frame to make our decisions. So basically, what we have on GBP right now, we can see that GBP is in a downtrend, right? We can see this low, high, a low, an high, and we can see this low, right? So basically, now market came to this particular zone. Came to this particular zone and took out this last high. It took out this last high, but remember that it has failed to close above that last high. It has failed to close above the last high. So we might be seeing little sells in the market before we can see new buys. But this is not just a confirmation that we are going to see sells. The market can keep buying like right now. But we need to also understand that this zone here is a key level in the market. You can see the market, you can see GBP, it hit this particular key level, went up, came down, hit this particular key level again, now went down again, hit this particular key level, sold again, now it has hit this particular key level again. So we might be seeing a little sell pressure before we might be seeing little sell pressure in the market. So let's go to our 1 hour time frame. Let's see what is actually happening at that particular zone. Let's see what is happening in our 1 hour time frame. Right now, we know that our bigger picture is bearish, but what we have seen last week is a bullish move, and we have gotten to a place where GBP hits the last high, but it has failed to close above the last high. So let's see what is happening in our higher time frame. Now in our 1 hour time frame, now the last zone that swept liquidity before making a new low, you can see this is our last strong low here. This is our last break of structure in our higher time, in our bigger picture, break of structure. So basically, this is the last high, right? This is the high that caused this break of structure, right? And after this break of structure, you can see that everything that came right here was just still inside this place. So we are going to just mark out the high. Let's see what the market did. Now you will notice that even in our 1 hour time frame, now market went to this place, still failed to close above, and then what did you see? You saw a market structure shift, right? And from there we saw this market structure shift in our 1 hour time frame. You can see this market structure shift right here. So we might be seeing little sell pressures. I'm not saying GBP is still not going to buy. It might still buy, but in the short term, we might be seeing sell pressures on GBP USD. And if we check our internal structure, this is our break of structure here. If we check the internal structure that caused that particular move, this is our break of structure. And after the break of structure, you can see this particular imbalance right here. You can see this huge imbalance. So we might be seeing GBP USD to come and fill this imbalance before eventually going ahead to clear this particular high, to break above this particular high. So for now, we might be seeing sell pressures in the market. Maybe on Monday and on Tuesday we might be seeing sales in the market before we eventually see some buys again in the market. But we are not leaning on that. For now, we are seeing some sell opportunities in this market. So we saw this break of structure right here in our 1 hour time frame, and after the break of structure, we saw something like this. We saw a pullback, right? And we saw a takeout of this low. If you view this particular point properly, you can see the wick. It's wick below them, right? So we can simply see that this place can now be used as our liquidity for the market to target. This particular zone as our liquidity for the market to target, right? And for us to be sure that this is a valid market structure shift to the downside, we can see that immediately after market made this high, it pulled back, made another high, pulled back, made another high. Now it is no longer 2 legs. This is 3 legs in the market. We can see 1, 2, 3. We can see 3 legs in the market, not 2 legs. So after this market structure shift, we can simply regard it as a valid market structure shift in the market. Now we are using this place as our liquidity for the market to target in our sell opportunities. So let's check our 15-minute time frame. Let's see if there is actually selling opportunities at that particular zone in the market. Now what we have right here, market took out this liquidity. You can see this was a low. Market took out this liquidity, made an high, right? It made this high, then came back to take out this low. That tells you that this is also a valid market structure shift in the market. Now this is our market structure shift right here in our internal structure. We have this market structure shift, and as usual, the pullback immediately after our break of structure is what the inducement. So you can see this as our inducement, this pullback. You can see it as our inducement, and we can see our point of interest, which is this order block, right? And it also has a fair value gap right there. So we have this, and you can see the market is simply reacting right now from this particular order block. So on Friday, I placed my sell entry because I don't know what the market is going to do on Monday. It's my spike to the downside, so I don't want to miss the opportunity. So I just placed my sell and it tapped me in, and I put my take profit just right here. This is 1:6.52. So if you are risking $10, you'll be getting $65 from this trade. So on this GBPUSD, this is my buyers right now. I'm looking to sell to take out this particular low because this is my liquidity, and I'm seeing a lot of imbalances right here for the market to attract the market to come down to that side. So that is my view on GBPUSD. Remember, if you are here to subscribe to this YouTube channel, make sure to click on the subscribe button right now and turn on the post notification bell so you can be notified whenever I drop a new video again. Let's get to our last pair, which is BTCUSD. Let's see what is happening on BTC. Let's see what is happening on BTCUSD. Remember, BTC is I'm trading 3 pairs. Sometimes I also trade EURUSD if I see opportunity on it. But I trade one metal, which is XAUUSD. I trade one crypto, which is BTCUSD, and I trade one forex, which is GBPUSD. So as usual, if you want to know, for us to see what is happening in the bigger picture, we have to go to our higher time frame, which is our daily time frame, to see what is actually happening in the bigger picture in this particular market. So let's see what is happening in our bigger picture. So right now, on BTCUSD, this is actually our last high here. So somehow we know that BTC is generally in an downtrend in our daily time frame. If we check the bigger picture, we know that, come on, I'm sweating, so I have liquid on my screen right now, which is a little bit disturbing. I don't want to make this thing go off because it will interrupt with my screen recording. So basically, we know this is our last high in the market, right? So we know generally that BTC is in a downtrend, and we have this particular order block sitting right there. You can see we have this particular order block sitting just right there. Now if we notice something, after the market hit this particular order block, the market came to take out the last low that went to the order block. This was the, the market went, this was the low that pushed the market high to hit this order block. And after the market hit this order block, what did the market do? The market came down to take this particular low. So somehow we know that BTC has potential of dumping, still has potential of going down. But for now, let's still see what is going on. So, and immediately after the market took out this particular low, the market failed to close below it. So we are still very skeptical on if the market is going to push higher, because the market failed to close below this low here. So we are still skeptical if the market will go like this, or from here probably the market can from here push down and start dumping again to take out this particular last low. Now why did I say that? You will notice that immediately after the market taps into this other block, there is a particular supply zone here that has a fair value gap. You can see the imbalance right here. We can see this imbalance right here. You can see the imbalance. So we might see market dumping. We might see gold, BTC selling, because basically the market what the market is simply doing right now, the market is looking like came to feel this imbalance, tap into this supply zone, then attempting to clear this low. Also, remember what happened on gold. I showed you what happened on gold. Gold, in our daily time frame, gold failed to close below the low, and people were thinking, oh, gold is now overall bullish, gold is now overall bullish, whereas gold only went to fill the imbalance and hit the supply zone, then dumped again and took out the last low. So that might also be happening in this particular zone where you can see immediately the market hits this particular supply zone, you can see the market giving a sell momentum immediately, and right now we are not seeing imbalances, good imbalances in the market. You will notice that market has partially filled this imbalance, market has also partially filled this imbalance, so we might be seeing a good dump in this particular market. Now let's go to, but for now we are not making a decision yet. Let's go to our 1 hour time frame to see what is actually happening in that after market hits that zone, to see what is happening in that point, so we can be sure if to start selling BTC or to still lean on buying BTC. So let's go to our 1 hour time frame and we start making decisions from there. Now market, what the market did, you can see what the market did. Now on BTCUSD, you can see market made a low. Market made a low right here. That is the after. I told you, I said it earlier, that it is either liquidity is formed before the break of the major structure, or BTC is formed after the break of the major structure. You will notice something right here. After BTC took out this particular high in the major structure, you can see that there is no liquidity here. Everything are just straight bullish move except this particular zone, and you can see that there is no imbalance beneath it, so we can't even see it as a liquidity. And you can see what did BTC do, because BTC knows there is no liquidity right here. What did BTC do? BTC created a liquidity immediately after the break of the structure. You can see made a low, then went up and made another low. From here you can see what BTC did. BTC made another high. So let's mark this place. We know this is our break of structure. You can see the break of structure. Now this is our last. We can say this place is our last low. You can see what BTC is doing right now. Immediately after hitting that particular order block, BTC failed. BTC is now approaching our last strong low in the market. So we might be seeing BTC selling off right now, but let's still wait. Now we saw a shift in market structure right here. You can see after market made this low, now went up, then did the market structure shift right here. There was a market structure shift at this particular zone right here. Now after the market structure shift, you can see the market pulling back, right, then making this low. So basically we saw this place as, you know, the pullback immediately after the market structure shift or a break structure is after the market structure shift or a double break of structure is the what? Is the liquidity. So, or we can also call it inducement. So we can simply say this is our inducement, right? So the mistake many of us is going to do right now, because it is simply clear that BTC is selling. It is very clear right now that this low is going to be taken out in the market. Now it is not left for BTC to now say, okay, oh, the sell is going to continue after taking out this low, or it might not continue. But as at the moment, BTC is definitely going to take out this low. Now what I'm expecting the market to do right now is what I can see in the market. You can see my network. So sorry about that. You can see that immediately, you can see that this was the other block, the supply zone, that caused the market structure shift. So that is our point of interest, and we can see this huge imbalance right here, right? We can see this huge imbalance right here. So what BTC is most likely to do right now, BTC at this point might come to this zone, and a lot of people will be seeing this place as the market structure shift to the upside, and there will be a lot of buy orders at this zone, whereas this is just the liquidity for this zone. This is an imbalance and this is another block. The market can decide to just fill the imbalance without reaching the other block, then sell off again. So what I'm expecting right here is just BTC filling this imbalance and probably making a market. Once BTC does a market structure shift in my 15-minute or 30-minute time frame, I will just wait for my liquidity, then I will sell off and target this zone. But for now, if BTC decides to come to this other block directly right now, I'm going to sell in market. I won't wait for confirmation. I will sell as market order. So I will sell directly if BTC decides to come to this zone. But somehow I'm still skeptical that BTC will get to this particular order block. It might just get to the 50% of the imbalance, then start selling again. And BTC might decide to take out this low first. Once it takes out this low, as usual, after a takeout of the major zone, after the takeout of the major high or a major low, you know what to do immediately, right? Look for your liquidity. If your liquidity should come up, if there is no liquidity before the break of structure, then the liquidity should come after the break of structure, right? So that is basically what is going to happen in BTC right here. This is my point of interest. But if BTC decides to take out this low, then we know what next to do. But at the moment, if BTC decides that okay, it's not taking out this low yet, then it's coming back to this place yet, I will sell at market order and I will target this low. So if you are here to subscribe to this YouTube channel, make sure to click on the subscribe button right now so you can be notified whenever I drop a new video again. Have a profitable week ahead. Thank you.